What's up, YouTube? Welcome to the Credit Plug channel where we talk about how to build credit, how to establish relationships with banks and financial institutions, and most importantly, how to get you access to high limit credit funding. If that's something you like to listen to, then stay tuned. Otherwise, you can support our channel if you like, share, a comment down below. It helps our content get out to a wider audience, and we greatly appreciate the support. As a reminder, don't forget to hit that notification bell to get the latest alerts on all the content we drop on the Credit Plug channel. So before I get into today's video, I just wanted to remind our subscribers that we cover a broad range of different credit and financial topics, including rebuilding credit, rewards credit cards, fintech companies, CDFIs. So it's a host of different topics that we cover. So if we cover a video or a particular product or an institution that does not fit, with whatever you have going on, that is just what it is, right? We're going to cover as much information as we can. All of it may not be pertinent to you, but it may be relatable at some other time later down the road. We're going to give it to you either way. So I just wanted to put that out there. Now, for today's video, we're going to be covering a topic we've never covered before, and this is securities-based lines of credit. Shout out to Jeff Seckinger, one of the only credit finance YouTubers I've seen cover this particular topic, but it's very important. Now, securities-based lines of credit, I would say, is much more of a niche, for the simple fact that you're going to have investment accounts, right? A brokerage account. So you have some of the major ones like Charles Schwab, Fidelity, Raymond James. You got Chase Private Client, Wells Fargo Private Client. There's a ton of different ones, right? So generally with securities-based lines of credit, the threshold is usually going to be at that $100,000 portfolio value, right? So that's usually the minimum threshold. It's going to vary from different brokerage firms, but that's usually the minimum. However, there are credit unions like I've covered First Tech where you just need a $50,000 portfolio. There's other banks as well. Fulton Bank is another example that offers stock-based lines of credit at a much lower threshold. So you don't need to have necessarily 100,000. You can get in the game at 50,000. So as I mentioned, this is going to be somewhat of a niche because not everyone, is invested in things like that. But I wanted to cover this because this is very important, and securities-based lines of credit you can leverage in so many different ways I'm going to go over. But basically what a securities-based line of credit is, right? So you have a stock portfolio or a bond portfolio, or a combination of the two, and you basically pledge your portfolio or your stocks as collateral for a line of credit. Now, generally with a stock-based line of credit, you could get anywhere between 50% or even in some cases up to 75% LTV, so loan to value. So let's say you have 50,000, and I'm going to show you an example. Let's say you have 50,000 and your line of credit, the bank's going to give you is 75% LTV. So then in that case, with a $50,000 portfolio, you would have 37.5 in the form of a line of credit. Now, your money is still invested. You're not selling shares or anything like that. You're still invested, right? You're still, the stock is still appreciating, hopefully. And, potentially if it's a dividend stock, still earning dividends, but you're just pledging it as collateral to get a line of credit, right? And that gives you flexibility in terms of liquidity because you can take that line of credit and go make another investment, acquire real estate, whatever, right? So I'm going to show you a couple examples of how to leverage a stock-based line of credit to not only acquire more assets, but also build your credit by having a high limit primary bank issued account reporting on your credit, and then create an cash flow and asset to repay the line of credit. So anyways, let's go jump over to this diagram. I'm going to walk you through exactly this creative strategy that some of us, can leverage in order to, build wealth, build credit, and create cash flow. So let's go jump over and I'll walk you through. All right, so here we are. This is the example that I'm giving you guys with the securities-based line of credit. For this example, we're going over a stock line of credit. So this is the starting point here. Let's just assume you have $50,000 in cash in your bank account, in your personal bank account. Now, here's the first step, right? The first step right here is to open up a brokerage account and purchase $50,000 worth of stock, right? In a case like this, you'd probably want something stable that the price isn't going to fluctuate as much, because one consideration with securities-based lines of credit, if the value of your stocks diminishes or decreases in value, then sometimes you might have to be able to cover the difference, right, of whatever, to maintain that loan to value proportion, whatever it may be. That's why usually stock based lines of credit you know are at about 50 to 75%, just to leave some buffer room in case there's any like market downturn or anything like that. But that's just one thing you have to keep in mind as well. If the value of the stock decreases too much, you might have to cover it. But anyways, the starting point right here is you have $50,000. You open up a brokerage account and purchase 50,000 worth of stocks, right? So now you have stocks that are worth $50,000 and appreciating, right? If we look at the long-term trends in the stock market, valuations go up over time, right? That's one of the assumptions. So 50K, right? And so then what you could do, if this is in a brokerage account, you have to check with the particular financial institution that you would plan to get the securities based line of credit from. Some of them, it can't just be in any brokerage. It might have to be in their preferred, like, sometimes these banks partner with brokerage firms. So you have to check that out. But anyways, so you have 50K invested, then you would go to the bank and apply for stock line of credit. Now, in this situation, we're assuming you get 75% LTV. So then you'll get a stock line of credit with a $37,500 limit. Now, this is going to be a credit line, or a primary trade line that will report on your personal credit. So in this case, since the dollar amount is much higher, it's only going to be high limits when you're working with stock baselines of credit, right? High limits, I mean, this is probably the lowest limit that you'd probably ever deal with, right? Because the minimum threshold at most, even the small banks, are, 50,000, right? I guess the lowest would probably be like 25,000, right? If you go to a bank that's offering 50% LTV and a minimum 50,000, but at some of these large brokerage firms, Charles Schwab, we're talking about $70,000 stock line of credit, 75,000 stock line of credit, because you need at least 100,000. So if they're giving you 70% or 75%, we're talking 70 to 75,000. But anyways, you get this stock line of credit, right? So this is a line of credit that you could pull all the cash off, right? You could pull it off. I mean, in a lot of cases, they give you checks. You could write checks, deposit that into your bank account, pull that money right off. Boom. So remember, you still have this 50K in stock, right? Nothing's happened to that. You still have that. That's still yours. It's just the bank has a lien on it in case you don't repay this 37.5, right? All right. So now you have 37.5. You still have your stocks invested. Now what you can do, you could take this 37.5, pull that off, and then go purchase a property. Let's say you purchase a property and your all-in cost is exactly 37,500, right? You'd have to find that deal, right? Hopefully you're getting the property below market value, so you might already have some built-in equity there. But you get that property and you rent it out, right? So now, remember, you pulled this 37.5 off the line of credit, so you have to repay that, right? But since you purchased a real estate property and outright, no mortgage on it, right? So now, since it's rented out, those rental payments can cover the payments for the stock line of credit, and you still own a house outright, right? There's no mortgage on it. You don't have any debt on this particular property, right? And the monthly rental payment is paying down the stock line of credit. And remember, you still got this 50,000 over here in the brokerage account. So then now that you have this, paid in full real estate property, what you can do is you can go to a different bank. And at some other banks, you can pledge personal assets for a business line of credit. And in some cases, they'll give you up to 80% LTV. In this example, I just kept it simple and said 75% LTV. So then now you remember, you still own this outright. You're just pledging it as collateral to get another line of credit. So then you can go get what, this is going to be based on whatever third party appraised value of that property, right? Assuming you got it below market value and it has some equity in it, you can just as easily get another, line of credit, this time a business line of credit, right? Because you could pledge personal assets for a business line of credit, right? You could use personal property. It has to be paid in full, right? No mortgages or liens on it, right? So then the bank, it will issue you a secured business line of credit using the real estate property as collateral. So now you have a business line of credit. So not only do you have more liquidity, right? So you could take this business line of credit and go invest in something else. You could go buy some more stock, right? Get a so you could kind of repeat this. Obviously, you wouldn't want to do it because you'd be highly leveraged, right? This is basically one example of that. But if carefully executed, all of this would work in a situation where you still have 50,000 in your portfolio. You have a $37,500 stock line of credit. And another thing I want to throw in, if the value of if these stocks appreciate, then you can get the limit reassessed, because if the value of this goes up, this 75% LTV represents more than the current limit. So that's another thing you want to keep in mind. So you have 50K invested, you have 37,500 stock line of credit, you have a paid off cash flowing rental real estate property, right? And then you have a secured business line of credit. And you just originally started with this 50K, but now look at what you have. You have 50K invested. You have 37 in the stock line of credit. You have a paid off in full real estate property, and you also got a secured business line of credit. So you're building so you're building wealth with this brokerage account. You're building your credit, and you have access to liquidity. So here's another thing too. Once this stock line of credit is paid all the way down, and this is a zero balance, you still owe nothing on the real estate property. And then you have a secure business line of credit, so you're building a relationship with that bank. And hopefully, if they report that secure business line of credit, you're also building your business credit. So I just wanted to share this example with you guys to show you some of the creative ways where you can leverage the money that you have, right? This sitting in your bank account is depreciating every single day, right, with inflation. So you want to well, I'm not giving you guys advice, but one of the things you can do is put your cash in a vehicle, right? Collateralize that cash and leverage the credit to invest. And your cash is still invested in your stock. So, you don't necessarily have to worry about that. And you have all of these other assets that you can use to continue to build wealth. So this is just a quick example I wanted to show you guys. If anyone has any questions, let us know in the comment section down below. And until next time, we'll talk to you soon.